Hello everyone and welcome to Your Trades. What a phenomenal week it's been for the frontline indices. In fact, you could call it the week of record highs because day after day we've gone ahead and surpassed our own records and hit new highs. Firmly perched at that 10,450 mark on the Nifty. Stupendous performance though by the broader end of the market is being reflected on your screens, with the mid and the small cap indices outperforming and quite significantly at that. In fact, in terms of sectors, you clearly had the real estate space which packed in quite a punch. You saw a very smart gain coming in for the real estate space as a whole, followed by consumer durables, and the Nifty Bank too, which was up a good 3.5% for the week gone by. By way of individual stocks in trade today that managed to stand out, well, it was definitely the PSU banks that held out. Media as a space was very active. And on the downside, well, it was some of those pharma stocks and energy that took a back seat. But nonetheless, it was a great day of trade. 10,452 is where we shut shop. In fact, let's talk about what's in store for the week ahead, where you should be placing your bets, as well as which stocks are active. Girish of Nirmal Bank Institutional Equities joins in to guide us through the fundamentals, and Kunal Botra, market expert, is with us on the technicals. Girish, thanks so much for joining in. We've gone on to really surpass ourselves for the markets. We've broken record highs. What's the sense that you're getting from a valuation standpoint right now, given the way we've moved?
Yeah, valuations continue to look expensive. I don't think there's too much of comfort from a valuation standpoint, be it from an index perspective or be it from individual stocks that the markets like. I think valuations are a tad expensive. At the index level, I think we're probably at one standard deviation above the long period average in terms of PE multiples on a forward 12-month basis. So valuation wise, I would think it's a tad expensive. I think that is largely to do with the fact that at the index level, earnings have really not grown very much over the last many years now. Though there was an expectation that every year you have kind of hope that earnings would kind of break out into beyond the single digit territory and go into the high teens or even early 20s. I would think that why the markets are probably doing well. One, I would think that you have continued inflow of domestic money. Secondly, I think in October we saw a situation where the FIIs have kind of ceased selling. At least if you look at the flows from the FII front, there's not been as much of selling as they did in, say, the month of September. And obviously we've had some good data come through on the macro front. We've had the recapitalization talk from the government side, and earnings by and large seem to be either in line or probably a tad better than expected. So I think the earnings season has been a fairly decent one. Of course, there have been one or two not so great numbers come through from certain companies, but by and large, I think they've been either in line or better than expected. So I think all these things combined have led to where the index is currently.
Okay, yes, indeed, it has been fairly positive from the news flow, and even the kind of earnings that we've seen, majority has been pretty much in line. Kunal, what are the technicals suggesting right now, given the fact that we've garnered support from, those rate sensitives like banking, real estate, infrastructure, etc.? What's the outlook on the index for the coming week?
I think, Avan, this is a picture perfect market. Anyone would have wanted. You have on one hand, support from a lot of sectors on and off. Low beta stocks, low beta sectors, even names or case in point is pharma stocks, which have been doing extremely well. There are a couple of IT stocks which are also looking quite robust and strong, even though the Nifty IT index is not performing the way you could have probably anticipated. But nevertheless, I think there is a lot of support which is coming across from different variety of stocks and sectors, and that's what is different about, or rather, is very good about this market. Look at the last week, which went by. Nifty was up 1.5%, and the 3 months of underperformance of Bank Nifty is now getting covered up. So Bank Nifty was up, I think, more than 3.5%. So that goes to show that there is a new leadership which emerges on the index at every new phase of, or at every new range of the market mood. Looking at the option positions as well. And there seems to be now a good support which has now come across at the 10,400 mark, 10,300 support zone. So I think till the time the global markets are positive, the internals of the markets are the way they have been shaping up, I think there is no case in point to be alarmed as such. Even when there are a couple of triggers, at least in terms of overbought territories which you're talking about.
Okay, a picture perfect market for sure right now, but in fact it was definitely a great week for one pocket, and that was the pharma space that was in news this entire week. In fact, a number of stocks benefited on the back of news, the likes of Biocon. You also had Divi's Laboratories, which had a strong dream run. Let's get in Pankaj to sum up all the action in the pharma space. Pankaj.
Pharma was clearly one of the sectors that was in focus throughout the week, not only because of results, but names like Divi's Lab were in focus. You got the import alert for their Visakhapatnam Unit 2 getting cleared. This came in as a surprise to the street, and you saw the stock popping up about 10% in this entire week. They also declared numbers. The commentary over there was decent, but now markets have started to factor in that there could be new approvals which will come in from this plant, and that essentially will lead to earnings upgrades going ahead. So that was one name that was in focus. Another name was in focus was an ET Now exclusive, that was Biocon. We can pick up from sources that essentially their Bangalore unit will get a clearance by US FDA, which means that the EIR would come in, that's Inspection Establishment Report. They earlier had about 9 to 10 observations over there. The French regulator had also given a lot of observations. The management, when we last spoke to them, very clearly told us that they have completed or started the corrective measure plan, and now it's the next process, which is what the US FDA essentially tells them. So what we can pick up is that they are likely to get an EIR very soon.
Okay, thanks very much for running us through all of those triggers in the pharma space. Meantime, let's also chat about the broader end of the market. And yes, there were some individual stocks that stood out in trade today. Let's get in Mubina, who joins in to tell us some of the movers and shakers from the broader end of the market. Mubina?
Well, yes, the broader market certainly was in the thick of action in the week gone by. I'll start off first with Hathway, which delivered its Q2 numbers. And while there was a significant decline seen in the top line, the company did manage to turn back to black and posted a profit figure of 14 crores versus a loss of 40 crores in the corresponding quarter, led by the super performance on the margin front, which came in at a good 40.2%. Rain Industries as well, certainly continuing the rally that we have seen that started off from about March or April. This time around as well, Rain Industries did perform very well. This is after Motilal Oswal initiated coverage on the stock with a buy and a target at 362 rupees, as according to them, the company is deriving the dual benefit of the demand growth as well as the supply shock driving the CPC prices, which is of course benefiting Rain Industries. Dredging Corp as well, Cabinet, remember, has given the nod for the government to divest of the entire 73% stake held in the company, and we did see the stock rally in trade. But on the flip side, we had Adani Transmission, wherein CLSA has a sell rating with the target as well, at the place, because according to them, the stock is a bit expensive and it's trading at a 150% premium compared to the calendar year 19 sector price to book. So according to them, the stock is a little expensive, and that was one big loser in the week gone by.
Thanks very much, Mubina, for highlighting some of those stocks that were in focus. In fact, let's get in a chart check as well then. And Rain Industries, on the back of that Motilal Oswal report, Kunal, saw a pretty phenomenal run, and can't ignore the way Dredging Corp is well shaped up. What's the view?
I think Rain Industries has been on a strong footing the last 1.5 years. It's almost risen 10x, if I'm not wrong, from those 2016 odd lows. And looking at the volume, the way the averages are shaping up for Rain Industries, I think it's raining gains undoubtedly. But I believe that an ideal strategy, when you're looking to buy such stocks, because these stocks, when they come into frenzy mode, you tend to be getting more lured into these stocks, and then once the stocks taper off in terms of gains or consolidate for longer duration of time, that is where you start making losses. So I think the ideal strategy is to wait for a decent amount of correction to these stocks. Rain Industries particularly has not seen a major correction as such. So I think if till the time we don't see a major correction, I think it's difficult to anticipate that where the stock can be headed into. Dredging Corp, on the other hand, I think had a very good last week as well, in trading very close to that 700 mark. It's on the verge of a big breakout on long-term charts. Multi-year breakout, to be precise, on long-term charts. So I believe that could be, remaining to focus maybe over the next couple of weeks.
Okay, Girish, let's get in a view as to how you're looking at the kind of earnings that we've seen so far. For instance, from the PSU banking space, PNB was the first one to deliver its report card. And essentially, on all parameters, it was a pretty stellar set of numbers, which is why the stock moved the way it did. How have you read into the earnings so far? Have there been any particular hits or misses or points that you'd like to highlight?
Yeah, as I mentioned, I think earnings by and large, if you look from an aggregate standpoint, have either met or beaten expectations. And I think if I look at the quarter on the consumption front, I think the top line has been beaten for a lot of consumer companies because there's been a restocking in the channels post GST. So there was a destocking related impact that kind of hit numbers in the June quarter. We saw the restocking kind of positively impacting numbers for the September quarter. I think the surprise has been at the margin level. I think for many companies on the consumption front, margins have been better than expected. I think there have been some benefits on the input tax credit side which have probably contributed to the margins. Plus, in certain companies, I think the revenue mix has changed more towards premium products, which has led to better margins coming through. So these two things have led to a situation where, earnings have been either in line or probably been better than what we were anticipating. Of course, we have, I think probably another half of the earnings season left. And once we have, the other PSU banks or either the corporate banks kind of deliver numbers, you'll probably see how much the damage is going to be, considering the fact that there have been some corporate banks coming up with earnings which have been a little disappointing because there's been a divergence between what the RBI's expectations on what the asset quality should have been versus the companies, and the companies have had to provide some extra money for that. So that I think could be the dampener going forward. But otherwise, I think the consumption side of the story has been fairly good. On the IT services front, I think the constant currency growth has been tad weaker than what we were anticipating, though I think even there margins have been a little better because utilization has kind of been a little better than expected. I think cross-currency benefits have been better. So those things have, I think margin front across the board, I think things have been better than expected. So broadly, that's the picture we're kind of coming up with. Of course, there have been certain outliers there, especially a stock like Inox Leisure, which I personally track, where we've had some blowout numbers come through on the margin front. Especially, for instance, we were expecting 9.7% kind of EBITDA margin. The company delivered 14.3% EBITDA margin, which led to almost like a 600% increase in PAT. So those were outliers, so to speak. But as I said, pretty decent numbers coming through because of restocking of the primary channel, better margins coming through in my view because of input tax credit, plus revenue mix change more towards premium products. So broadly, that's the picture we kind of see as on the earnings front.
Okay. Another big story this week that we at ET Now tracked fairly closely was the mega merger between IDFC and Shriram being completely called off. And then we also connected with Mr. Tyagarajan, who said that this doesn't mean that they will not explore talks yet again. How would you view this overall, a merger situation being called up? There were a lot of concerns regarding the swap ratio, the valuation, and even the regulatory approvals.
We really don't track either of these two companies, so I'm not in a position to really comment on this specific event.
Okay, fair enough. Let's get in a view on the charts then, Kunal. Any specific trend that you're seeing on the likes of IDFC or Shriram?
Yeah, I think for Shriram particularly, after that move which came out from the news, the stock headed back into its big resistance zone, and the underperformance which Shriram was having as compared to a lot of the NBFC move which happened I think few months back, that underperformance has more or less got covered into. And now I believe that this could be one stock, I think other than the news which may sort of come out, I think in terms of chart structure, it could probably remain in this 1300 odd point, 1300 pivot range over the next couple of weeks. It's also a multi-week resistance for Shriram, so I think that could be one more point of short-term technical concern. But IDFC on the other, and I think after that last week move, the stock has more or less come back into that range. The earlier support for IDFC was around that 55 mark and 65 as a resistance. So I think it's in this 10 rupee 10 point odd band, and would probably continue to remain in this band till the time you don't see a major breakout. Volumes as of now are not indicating any such move on the charts.
Okay. We'll slip into a quick break then right here on the show. Stay with us. We get you some perspective as to what the dealing rooms are chatting about, some of the big listings to watch out for, as well as the big results.